All right, hi everyone. Welcome to today's webinar session brought to you by IC Markets, where with today's session is going to be on the live trading analysis. Oh no, sorry, it's going to be the live analysis session. Uh, I'm just replacing Emily for today, right? So she's not feeling too good today, so I'll be taking over today's session. Right. The, so before we start, just want to make sure, right? We are streaming onto YouTube and IC Markets directly. So, should you have any requests for any analysis that you'd like to see for the commodities, indices, or any of the currency pairs, do drop your requests in the chat boxes, and I'll be more than happy to go through the analysis with you. All right, I think we're all good to go. So, just once again, my name is Ketan Ramachandra, and I'll be taking over Emily today. She's not feeling well, so let's get this live analysis session going. All right. Okay. So I trust all of you had a great weekend, and you all set for a brand new trading week. All right. So take note. I'm streaming. We are streaming on YouTube as well as on IC on Trading Markets. So yeah, please do drop your questions and requests should you have any in the respective chat boxes. Right. And just before we start as well, uh, right. Yeah. Just before we start, take note. We've got a pretty heavy calendar this week as well. We've got five central banks lined up this week, kicking off things. We've got the Bank of Japan tomorrow, 19th of March, followed by the RBA. And then, of course, on Thursday, Wednesday, 20th of March, we've got the Federal Reserve with their FOMC meeting as well. And all eyes will be on Jerome Powell's press conference later on that day at 6:30 p.m. GMT time. Take note of that. And then on Thursday, we have the double uh, central bank announcement from Europe. We have the Swiss National Bank at 9 a.m. 8:30 a.m. GMT time. They will release their statement at 8:30 a.m., followed by the press conference at 9 a.m. And then finally, we have the Bank of England that will drop their monetary policy statement at 12 p.m. GMT time. So take note, it's a very heavy calendar this week with five central banks releasing their respective monetary policy statements, as well as the press conferences by the central bank chiefs. All right, so take note of that because it's definitely going to be a high volatility period during the announcements of the respective monetary policy statements, as well as during the press conferences as well. All right, okay, so with that, let's start the session today. Let's start our analysis on the dollar index, of course. All right, okay, so I'm on the 4 hour time frame for the dollar index here. Okay, so I just monitoring the chats, make sure everything is fine. All right, okay, good. All right, okay. All right, okay. So, right, so as you can see, since 8th of March, the dollar index has found support around 102.60 and has risen quite strongly. Part of the reason is we had strong NFP data on 8th of March, right? We had NFP numbers coming in stronger than the estimate. Then we also had CPI data, US CPI data that was released on the 12th of March, Tuesday, as well as PPI data that was released on the 14th of March, Thursday. So we had three sets of economic data points that created strong demand for the dollar, which is what has caused this uh, reversal in the dollar index. So if you look on the weekly time frame, you can see that the dollar index was actually falling for the last 3 weeks, right? Since the third week of February, it was falling relatively strongly from going from 104.30 to as low as 102.30, right? So it lost almost 200 pips over this 3 week period. But as I said, the combination of stronger NFP data plus hotter than expected CPI and PPI data points has reversed this trend last week. So we saw the dollar index go from 102.70 to close at about 103.40 last week. Now, could we see this bullish reversal or this bullish momentum continue? Perhaps we can, right? Because we've got the FOMC meeting coming up on Wednesday, 20th of March. And if we see a statement as well as a press conference by Chairman Jerome Powell that communicates a very hawkish language, we're likely to see the dollar bulls return in full force once again. All right, so take note, uh, after a 3 week decline, the dollar index reversed quite strongly last week, and we could see this bullish momentum extend this week as well, especially with FOMC coming up. All right. Okay. So with that, where are the significant support and resistance levels? Right. Okay. So once again, I'm on the dollar index here. I'm on the 4-hour time frame, and we can run the Fibonacci retracement as well. But let's look for what I do see before doing pulling up the Fibonacci retracements. I do see a pretty decent pullback resistance level here at around 103.64. Right. Previously, you can see this level at 103.64 function as a strong pullback support back in February, right? 22nd of February, the 27th, 29th, as well as in early March as well, 6th of March as well. So previously, price has bounced off this level several times, but now with price breaking underneath it and approaching this, what was previously known as a pullback support level, now this level could then potentially function as a pullback resistance. So that's why I've identified 103.64 as my first resistance. Now, with regards to the second resistance, there's another level here. I see a nice overlap level here at 104.18. Right, from 15th February till 20th of February, we could see price finding good support here. And when price finally broke underneath it, it failed to break above 104.18 from 21st of February all the way till the 1st of March. So thus creating an overlap resistance here. So this is going to be our second resistance. Right, we can also run the Fibonacci retracement. We can start the retracement from here. This swing high here on the 14th of Feb, going down to the swing low here on the 8th of March. Let's see, it might be the 61 and 78. Okay, no, actually, none of the Fibonacci retracement levels align well with the identified resistances. That's fine, right? As a take note, we try not to force a Fibonacci level onto the major resistances or support levels, right? Just because there's a Fibonacci retracement level there at this particular point doesn't mean we have to use it, right? If it aligns very well with what we've identified as our first resistance and second resistance, then of course, then we would use the Fibonacci retracements that because they would add additional significance to the importance of this level, right? But however, in this scenario, we don't have such a case. We don't see any alignment between the Fibonacci retracements and our first and second resistances. That's fine. So let's just get rid of it. We don't need that. We don't need this Fibonacci retracement here. All right. Okay. Let's see. All right. Okay. All right. So we've seen the first resistance and second resistance levels here. Right. So if we do see, uh, although as you can see today, 18th of March, prices, the dollar index has been pulling back for the initial part of the day, but we could see this bullish momentum continue as well. All right. So take note that its prices are currently pulling back, and where I do see a pretty decent support level here is around 103.04, right? This is a pretty decent support level here. We can see price running the resistance here on the 12th of March at 103.04, pulling back before finally going higher. It is not the strongest support level, hence I'm just identifying it as an intermediate support level here at 103.04. Where a strong support comes in is at this pullback support level here that occurred on the 8th of March, right? Right. You can see this on 8th of March, the body of the candle failing to break below 102.55. So this is where I'm going to identify my first support for the dollar index. All right. Okay. We can also run another Fibonacci retracement from here. This swing high here, or not this swing high, but this pullback high here on the 1st of March down to this low here on the 8th. We can see that price is currently trading close to the 61.8% Fibonacci retracement level. So let's just keep that on. right? So probably the first resistance, I'm going to highlight it as a zone rather than a absolute level here. So you can see price is indeed trading or came close to the 61.8% Fibonacci retracement has started to pull back today. So we could see prices consolidate around 103.40, 103.30 before it potentially resumes the uptrend as well. But take note, first resistance is a strong zone between 103.55 and 103.65. Right. So should you have any long dollar index positions, right, and as price continues to rise up, should it continue to rise up, you can identify this zone here as a potential take profit zone for any long dollar index positions that you may have. All right. Okay. Let's see. Is there anything else here? In terms of resistances, no. So, is there? Probably I can use a Fibonacci projection. Let me try. Okay, projection involves 3 points. So let's start the first point from here. 1st of March, going down to this low here, 8th of March, ending with today's high here. And let's see if any of the retracement levels, projection levels align. Okay, no, they're still a little bit far from where our first support is, but generally you can see 61.8%. The Fibonacci projection is 61.8% lies quite close to where the bottom of this wick is. But for now, since price is trading pretty far away from where the projection levels lie, let's not use them in the analysis for now. All right. Okay. So these are uh, the significant support and resistance levels for today on the dollar index on the 4-hour time frame. Do take note, dollar index is pulling back today as we speak, but we could see this upturn continue as the week progresses, right? Especially with FOMC coming up on Wednesday. All right, okay, so these are the main levels here, right? Since we have the BOJ and RBA releasing their respective monetary policy statements, so let's look at the analysis for these two currency pairs next, right? So we'll start off with dollar yen. All right. So similarly, as we saw 8th of March, we had stronger than expected NFP data, followed by strong CPI data on the 12th and strong PPI data on the 14th. So you can see demand for the dollar has indeed picked up since 8th of March, which of course means currency pairs like the dollar yen is going to rise strongly. So there's even, I do even see a pretty decent ascending trend line here. There's still a pretty decent ascending trend line for the dollar index, right? You can see, sorry, for dollar yen, price has bounced off this ascending trend line several times. So this is a good uh, s- uh, trend line which highlights the strong bullish momentum for dollar yen, right? With regards to resistance, when I look across this price level here, which is at 149.64, this looks like a pretty decent pullback resistance level, right? Previously, this level was functioning as a pullback support, right? So since 15th of February till the 6th of March, right, the dollar yen was trading above 149.70. It bounced off this level several times. So this level here, 149.67, was previously functioning as a pullback support level, but of course with price breaking below it now and then rising up towards it once more, this level could now potentially function as a pullback resistance, which is why we've identified it as the first resistance. Right, second resistance is pretty clear when we look across this price level here at 150.78. Right, this was previously a strong pullback resistance where the dollar yen failed to break above this level from the 13th of February till the 1st of March. So for over a period of 2 weeks, right, dollar yen failed to break above this pullback resistance level here. So that's why I've identified this level as our second resistance. First resistance, right, as I mentioned, is this pullback resistance here at 149.67. Right, we can also run the Fibonacci retracement. Let's start this retracement from here. This is well, technically, okay, wait. Technically, all right, although this is the high here, but you can see that the trend line doesn't capture the market structure very well. But when we start the retracement from here, which is on the 28th of February, we can see the trend line captures the market structure pretty well from this point onwards and ending here on the 8th of March, right? So price has already broken above 61.8% Fibonacci retracement. Let's see if the 78.6 is something that we could use, right? So we can see the 78.6% Fibonacci projection. Retracement does lie pretty close to where the pullback resistance has been identified. So it's, once again, this is more of a zone rather than an absolute level here. So take note, first resistance is uh, aided by the 78.6% Fibonacci retracement, adding to the significance of this potential barrier here. Right. What about support? Right. What about support? When I look across this price level here at 148.84, this looks like a pretty decent overlap support level here. Right. Price previously running the resistance on the 19th of Jan. Even here on 24th, you can see price came quite close to this level before being rejected. Then again on the 5th of February, twice on 5th of February. And then when it broke above this level in mid-Feb, you can see as it pulled back here on the 12th of February, it found support above this level before going higher. So this creates a pretty decent pullback. This creates an overlap support level here, which could once again be a place where dollar yen could pull back before resuming the uptrend, and it also intersects with the ascending trend line as well. So first support for dollar yen is at 148.80. Right, and as I mentioned, we can see this part here. It's more of a zone as well rather than an absolute level. Right, okay. And then what about the second support? When I look across trying to see anything here, there is, I guess, a case for pretty decent pullback support somewhere around here. Okay, wait, this is going to be around 148 or just under 148. Right, so previously price finding resistance at 147.96 on 12th of March, 13th of March, and as well as 14th of March before finally breaking higher. So what was previously a pullback resistance level could now potentially function as a pullback support. So that's why we're identifying 147.96 as our second support. All right. So of course, with the Bank of Japan releasing its monetary policy statement tomorrow, to take note, the Bank of Japan is still the only major central bank that has kept its policy rate at negative 0.1%. But there have been talks recently that the Bank of Japan may finally consider raising interest rates, right? Raising its key policy rate. So if that were to happen, if we get an unexpected move by the BOJ tomorrow, that means we could potentially see a very strong demand for the Japanese yen come in. So should that happen, that means this currency pair, dollar yen, and all the other yen crosses are likely to fall pretty hard. So take note, if the Bank of Japan does unexpectedly raise its interest rates tomorrow or give any indication that they are planning to raise their interest rates in the future, this could potentially create very strong demand for the Japanese yen. And that means we are very likely to see the yen crosses, including dollar yen, pull back pretty sharply. So take note of that. So if we do see that happening and price and dollar yen breaks below this ascending trend line as well as the first support, we could potentially have a bearish breakout on hand, and we could see dollar yen drop all the way down towards its second support, which is around 148. However, if the statement comes out to be relatively the same as the previous statements, where they are more neutral and maybe even somewhat dovish, then of course we are going to see dollar yen continue on its climb here. We can see, right, it's been in a strong bullish momentum as supported by this ascending trend line since the 8th of March. All right, okay. So these are the key resistance and support levels for dollar yen on the 4-hour time frame, and take note of the Bank of Japan's monetary policy meeting tomorrow. Although the time is not fixed, but typically they usually drop their statement at about 3 or 4 a.m. GMT time, and then the press conference is usually followed, I guess, about 2 hours after. Right, the Bank of Japan likes to keep the markets guessing as to when it will actually release its statements. So do take note, it could be anywhere between 3 to 4 a.m. GMT time tomorrow. Right. Then we have the RBA, the Reserve Bank of Australia. Right, they are widely expected to keep the cash rate on hold at 4.35%, and depending on how uh, the statement and the press conference turns out, we could see the Aussie pick up tomorrow as well. Right. So take note, after the Aussie sold off strongly, right, since the 8th of March. Remember, NFPs on 8th of March, CPI data on 12th of March, and PPI data on the 14th. The Aussie really has pulled back quite sharply to drop as low as 65.55, but it found strong support here last Friday and has retraced higher today as well. Right, so should we see an RBA statement that sounds hawkish, as well as the press conference where Governor Michelle Bullock uh, communicates a very uh, aggressive outlook with regards to monetary policy, or if they don't give any hints of future rate cuts, then potentially we could see a short-term bounce for the Aussie here. Right. Okay. With that, let's see where are the key support and resistance levels. So of course, with the Aussie finding strong support here last Friday, right? This is I would like to identify this as the first support level here, right? We can see price running into resistance here, making a small pullback resistance here at the end of February, and then now finding support here in mid-March. So this creates an overlap level, which is what we're going to use to identify as the first support at 65.53. Second support could be this other overlap level here, right? We can see price finding support here on 20th of Feb, 27th, and then after when it broke under, it found resistance twice on the 29th of February as well as early March at 65.30. So this is another overlap level where price could now potentially find support as well. Okay, and what about resistances? All right, when I look across here, this is another overlap resistance, price running into resistance here on the 22nd of February. We can see price making a very significant swing high resistance here, right? You can see the market structure that occurred on 22nd of Feb. This is a very significant swing high resistance, which finally broke above. But then this was a swing high resistance and then proceeded to function as an overlap support. So as price was falling down quite sharply last week, it found support just above this level to retrace a little bit higher. So you can see that this was indeed a pretty decent overlap support level. And now, of course, with price trading underneath it, it's quite likely to function as a potential overlap resistance. Right, so I'm going to label 65.88 as our first resistance. Right, and second resistance is simply going to be this high here, or this pullback resistance level here at 66.39. Right, so depending on the statement tomorrow, the RBA statement as well as press conference, we could potentially see the Aussie bounce off the first support, and if that were to happen, then we can probably target the vicinity of the first resistance as a potential take profit for any long Aussie positions tomorrow. And also for today, if you do have any short Aussie positions, right? You can see the current 4-hour candle is pulling back, right? Prices retrace a little bit higher today, but the downturn could resume. So should you have put on any short Aussie positions for today, you can target the vicinity of the first support at 65.55 or 65.53 as a suitable take profit level. And of course, come tomorrow, if we see the RBA present itself as very neutral or dovish, even dovish perhaps, then we could see the downturn for the Aussie resume, and we may have a potential bearish breakout on hand should price break below 65.53, and then you can target 65.30 as a suitable take profit level for any bearish breakout opportunity here. All right, so these are the key levels for uh, the Aussie. All right, let's see if there's any Fibonacci retracements that we could use. Let's start the first retracement from here, from this low on 5th of March, going up to the high here on the 8th. Let's pull up all the fibs. Maybe there's a 50 or 60 that we could use. Okay, we've got 61 that aligns pretty well with the first support, so that's great. So let's just keep 61.8%. Right, and what about resistances? I think we can run another retracement from here, from this high on 8th of March down to this low last Friday. Maybe, what is it, 38? No, 38.50. No, none of the retracement levels align well. So if anything, I would just use the 38%, right? If anything, I'll just use 38% and then highlight this as a zone here, because we got the top of the wick that extends a little bit here as well. Right. So take note, these are the key support and resistance levels for the Aussie, and also take note of how tomorrow's RBA could uh, definitely drive the direction of this currency pair. Right, and take note, we can use the resistance levels here to identify a suitable take profit zone should price bounce off the first support and continue rising higher. Should we see hawkish RBA? Conversely, should we see them come out to be relatively neutral or even dovish, then we may have a potential bearish breakout scenario on hand. So we could potentially see the Aussie break underneath the first support at 65.53. And if that were to happen, we can target the second support at 65.30 as a suitable take profit zone for the short bearish breakout opportunity. All right, okay. With that, after that, we're going to look at dollar franc, right? We've also got the SNB, Swiss National Bank, coming up on Thursday, 8:30 a.m. GMT time. So let's see how where this currency pair has been trading. Right. Similarly, uh, like all the other dollar denominated or dollar related currencies, since 8th of March, uh, we can see that the dollar franc has stabilized around 87.50 and then proceeded to go higher, fueled by hotter than expected inflation data, right? So of course, we can see where the first resistance is. First resistance is quite clear here. It's at 88.63, and we can see price running into resistance here on the 1st of March, 5th of March, and then this is an area where price could once again stall, where the dollar franc could once again stall around this region. With regards to the second resistance here, second resistance is going to be the top of the wick here, right? Second resistance is here at 88.92. And if I just were to highlight it as a zone, right, because you can see price making this pullback, strong pullback resistance here in mid-February as well, before dropping quite sharply. So these are the resistance and support levels, right? And with price finding support here last Friday at 88.26 and has moved a little higher, has edged higher. So should you have any long dollar franc positions here, you can where you can target a suitable take profit zone would be in the vicinity of the first resistance, right? So anywhere between 88.55 to 88.60 would be a suitable zone for today to identify as a take profit level, right? Especially with price finding support of this pullbacks here. This I'll probably highlight this as an intermediate support, right? It's not the strongest support level, but you can see quite clearly since last Friday, price has managed to stay above this level and is edging higher today as we speak. So we could see this bullish momentum continue for dollar franc, and then you can target the vicinity of the first resistance as a suitable take profit zone for any long dollar franc positions. Now, what about the major support level here? Okay, the first major support for dollar franc that I see comes in at 87.53, right? We can see back in 22nd of February as price fell strongly, right? We can see a pretty decent swing low take place here. The market structure shows pretty decent swing low that occurred on this date, right? Price finding strong support at 87.53 to bounce higher, right? So that's where the first support has been identified. What about the second support? When I try and look across anything else, is there any other levels? Potentially, this looks pretty good, this overlap level here. Right, we can see price running the resistance on the 23rd of January, then again on 7th of Feb, and also here we can see on 8th of March price finding support just above 87.80. So this does look like to be a pretty decent uh, overlap support level here, which is what we're going to use as our second resistance, second support. Right, so 87.18 is our second support, 87.53 is the first support. Right, we can probably use a Fibonacci retracement as well. Let's start the retracement from here, from this high here on the 1st of March, going down to the 8th. Is there 78.6 that we could use? Yep, 78 is there, perfect. So let's just keep 78 on. The 78.6% Fibonacci retracement also aligns very well with our first resistance here. So that adds more significance to uh, the importance of this barrier here, right? This could really be a pretty strong barrier for dollar franc in the first half of this week. But should we see a very hawkish press conference by Chairman Jerome Powell, then of course we are likely to see dollar franc break above the first resistance and even potentially break above the second resistance in the second half of the week. But for now, uh, at least for the first couple of days, this first resistance at 88.63 does look to be pretty important for dollar franc. So should you have any long dollar positions for this currency pair, identifying your take profit within this vicinity would be probably a good idea. Right. Okay. And is there anything else that I can use? No, probably not. All right. So these are uh, the main levels to watch out for dollar franc on the 4-hour time frame. All right. Okay. Then with that, to wrap things up on the interest or central bank front, the last central bank for this week to make its announcement is the Bank of England. So that's going to be at 12 p.m. GMT time on Thursday, 21st of March. So, of course, as you can see, since the 8th of March, stronger NFPs plus strong CPI plus strong PPI data out of the US has really created strong demand for the dollar, which of course means pound dollar is going to pull back quite strongly. But it does seem to have found a decent support here today at 1.2724. It's not the most strongest level here, but you can see it has formed a little bit of a small support. So let's just identify this as intermediate support. So should this level get broken today, we may potentially have a potential bearish breakout, right, for this currency pair today, right? To take note. So we can see price is still in a downtrend, right? When I look across here, price is still in a downtrend. We have a nice descending trend line for the pound yen here, right? And with the current 4-hour candle reversing and trading around 1.2735, should it break below 1.2723, we may have a potential bearish breakout for the pound. And where could be the next support? Next support for the pound does look like to be at this overlap level here. It's not the best level, right? It's not really the best level here, but maybe yeah, it's not really the best level here, but let me try and explain why. Okay, we can see price running to strong resistance here on 22nd of February, the 23rd, 26th, 27th, and once again in early March as well, 5th March. So this was a strong pullback resistance level in the past. Then when it broke above it on 6th of March, it found decent support, not the best support, but it found pretty decent support on the 6th before bouncing to go higher. So we have an overlap support level here at 1.2700, which is also aligns very well with the whole number here. So we could potentially see a lot of bids coming in around this level. So should we see a potential breakout occur, a bearish breakout occur for the pound today, do take note the first support at 1.2700 could be a major support zone for this currency pair. Right, the second major support zone where I see is likely to be around here. This pullback level here at 1.2620. Right, price bouncing off this level here on the 28th of Feb. 1st of March, and then again, and also at the latter part on the 1st of March as well. So price has bounced off this level several times, and we can see very strong support here. So this could be where the next support, where this is where the second support for the pound lies, 1.2621. With regards to resistance, there is pretty decent overlap resistance here as well, right? You can see price running the resistance here on 12th of Jan, 24th, and 2nd Feb. And then when it broke above it, it found support at this level here on the 12th of March, retraced a little bit higher before finally dropping. So we have a nice, or we have a rather significant overlap level here, which is what we can use to identify as the first resistance, which is at 1.2772. With regards to the second resistance, there's a pretty decent pullback resistance level here that occurred on the 12th of March as well as on the 14th, which is at 1.2819. So we can use this level to help us identify as our second resistance. We can also use a Fibonacci retracement. Let's start this retracement from here. The swing high here on the 8th of March going down to this morning's low. We should have 50, 61. Okay, we do have the 61% Fibonacci retracement that we could use with the second resistance. The other two for first resistance is right smack in between 23 and 38%, so there's no point forcing that level. Let's just use the 61% to help us add more significance to the second resistance here. Right, okay. What about on the support side? I think there are a couple of retracement levels that we could use as well. So let's start the retracement from here, 1st of March, ending with this high here on the 8th. Once again, we do see 61 probably, and is there 78.6, or is it just in between? It might be sort of no. Um, right, okay. We can probably use the 61.8% here. Right, we probably just use the 61.8% highlighted as a zone. Right, because you see the top of this wick here coming as high as 1.2712, and even here as well. Right. So although we may have a potential case for or a pretty decent case for a potential bearish breakout today at 1.2723, do take note that this zone that is bounded by the 61.8% Fibonacci retracement as well as this overlap level here could offer strong support for prices in the near term. All right, so this is what we have for the pound. All right, so we've covered all the currency pairs that are going to be impacted by this week's central bank decisions. Let's switch on over to the commodities, right? Let's take a look at gold, and then we'll probably wrap up with oil. All right, so right before I start on gold, should you have any requests for any analysis, please do drop them in early into the chat box, so that we have time to go through the analysis together. Right, I do not wish to rush through any analysis, so should there be any requests, please do drop them in early, and we can go through the analysis together. All right, okay. Before we start on gold, let's just take a look at spot gold prices on the monthly time frame first, just to appreciate this really strong move in gold prices here. Right, we can see gold made a new all-time high in March, hitting 2197, right, hitting a high of $2,195 per ounce. So quite clearly this is going to be our first resistance here, and you can see previously 2070 was the previous major resistance for gold, right? You can see price running into resistance here on 3rd of August 2020, 1st of March 2022, 1st of May 2023, and even early at the end of December last year as well, right? So this was previously a very strong resistance level, which could now potentially function as support, right? And also, right. So now that you can see how strong this move in gold has been, especially since October of last year, right, from rising from about 1850 to as high as 2200. Where you can see this has been a really strong move in gold. All right, so with that, let's zoom in down into the lower time frames. Right, so no changes to first support. I believe the first major support is fine 2075. Um, there's no, I don't really see any other major support level in between, right? You can see quite clearly there's no other major support that we can reference. So perhaps we can use a Fibonacci retracement just to see where there may be any potential levels. All right, for now, we can see price has uh, bounced off the 23.6% Fibonacci retracement quite nicely. So for now, we could potentially use this level as intermediate support or downside confirmation. So that means if we see uh, spot gold prices break underneath $2,145 per ounce, then we could potentially see further downside movement, right? So that where that could happen could be next around where the 50% Fibonacci retracement level lies. So let's keep 50 and 23. Right, so we may have a potential bearish breakout for opportunity for gold spot gold prices. So should that occur, so should we see uh, price break underneath 2,145, it may trigger further downside action, and where it could really find strong support would be the vicinity of the 50% Fibonacci retracement, as well as the first support at 2,075. All right, okay. What about the next resistance? Right? As you can see, this was the all-time high, right? The all-time high for spot gold prices is here, 2,195. Where could we identify uh, the next resistance level? Perhaps we can use a Fibonacci projection, right? So let's start this projection from here. 6th of October going up to this high on the 4th of December, ending with this low here on the 13th of December. Right? If we pull up all the fibs, right, you can see price has already reached the 61.8% Fibonacci projection, right? So we can't, there's no point using that. So let's get rid of it. And then we can just keep 78.6 and 100%. So should we see price reverse for gold and break above the first resistance, that the next resistance could potentially come in. Oops, hang on. What is this here? All right, sorry. Right, so we could potentially see next resistance at 2,235, and of course then the 100% Fibonacci projection is here at 2,300. Is there anything else that we could potentially use? Let me see if there's any extension levels. 127, 161, could we use any extension levels? All right, so you can see 127 aligned pretty well with the 61.8% projection, but of course with price reaching it, so let's not use that. But we can do see 161 aligning quite close to the 78.6% Fibonacci projection as well. So we've got a confluence over here, Fibonacci confluence. So we can highlight this area as a resistance zone. Right, so when price is trading at all-time highs, how do we find the next level of resistances? Well, we can do that a couple of ways. One way is to use a Fibonacci projection, right? Projection uses 3 points. So I started this projection here from 6th of October, going up to this high on the 1st of December, ending with the low here on the 13th of December. And I'm using the 78.6% and 100% Fibonacci projection. Projection levels help me identify the next resistances, and also we can use Fibonacci extension levels. So these extensions are found by using the retracement tool. So we started the retracement from here, this high on the 4th of December, going down to this low here on the 13th of December. We're using the extension level at 161% here. So this is some couple of examples of how we can try and identify uh, potential resistance areas or zones should price be trading close to the all-time high. All right, so take note. Uh, Today, gold prices does seem to have found a little bit of support at 23.6% Fibonacci retracement. However, should we see demand for the dollar continue to remain elevated, then we may have a potential bearish breakout scenario for gold prices. And should that occur, which is this downside confirmation level at 2,146, we could see gold prices slide all the way down towards this zone that's bounded by the 50% Fibonacci retracement, as well as this pullback support level at 2075. All right, then with that, let's move on over to crude oil. So for the instrument that I'm using here is XTI USD. So this instrument tracks the WTI crude oil futures contracts here. So once again, uh, we saw WTI oil break above this resistance level. This was a pretty strong pullback resistance level, right? We can see since 14th of November, 30th of November, and even last week, and beginning of March, price failed to break above this level quite convincingly, but finally the bullish breakout did occur last Thursday, right? So this was a strong pullback resistance in the past, which is now potentially going to be our first support here, right? We can also, and then in terms of resistances, right, I do see overlap resistance here at 83.90, so this could potentially be where the first resistance is, right? Okay, let's zoom in onto the 4-hour time frame and try and fine tune the analysis. Right, so you can see here on the 4-hour time frame where it's probably a little bit better to identify the first support could be around here at 80.63, right? So at $80.60 per barrel, and we can see price finding decent pullback support here on 2nd of November and 4th of November of last year, and then after that running into resistance here on the 1st of March, so thus creating an overlap resistance, running to resistance once more 6th of March, and then you can see finding a little bit of support here as well, right? So this is how the first support for WTI oil has been identified. First resistance is this overlap level here, right? Very clearly here, price finding support here in end October, then running into resistance in early November, thus creating an overlap here. So this is our overlap resistance level that we are using it to identify as the first major resistance. Right, so should we see uh, crude oil continue to push higher, right, we may see it where it could find support would be around this region here at $81, $80 and 80 cents. This support here could offer some pretty decent pullback support for price to bounce off and then potentially move higher, right? So should we see a pullback occur and price reverse to continue the uptrend, then where it could then run into resistance or find strong resistance would be the area of $83.90 here, right? And I believe we can also use a Fibonacci retracement. We can draw the retracement from here, 20th of October down to this low here on the 13th of December. I believe it's 61 and 78%. Oh, actually, no, there's no real 61 is just in the middle of nowhere, whereas 78 may be more applicable here. We could probably use the 78% retracement to help us identify the second resistance here. All right, so let's get rid of 61. It's not really useful. And just keep 78, the retracement level at 78.6%. Right, okay, then what about the second support for crude oil or WTI specifically? It's quite likely going to be here at $77.32 per barrel here. And we can see price bouncing off this level several times, 27th of Feb, 5th of March, and again on 11th and 12th of March as well. Right, so the bias for crude oil is to the upside. However, pullbacks along the way can happen. So where we could see price find strong support would be the zone between $80.30 and $80.80 per barrel. So should we see price pull back and find support here, we could then see the bullish momentum continue and then price could rise towards the region of $83 and $84 per barrel, which is where the first major resistance comes in. I just probably like to highlight this as a zone. Right, take note. All right, so okay, take note. These are the key support and resistance levels for XTI USD. So this instrument tracks the WTI crude oil futures. I'm on the 4-hour time frame. All right, so we've seen a strong bullish momentum, bullish run for crude oil since last Tuesday, and it's quite likely this is going to extend this week as well. However, right, prices, nothing moves up or down the straight line. So should price continue to pull back as seen in the current 4-hour candle, WTI oil could find strong support in this zone here between 80, um, 80.30 and 80.85, where it could then potentially reverse to bounce and resume the uptrend. All right. Okay. Let me see. Is there anything else that I can try and do? All right, perhaps there's a Fibonacci projection I can use, right? So let's start this projection from here. 5th of February going up to the second point, 1st of March ending with the third point here on the 11th, right? We can see that the 100% Fibonacci projection aligns very well with the second resistance, and the first resistance also lies within the zone of the 78. So let's just keep these projection levels on as well. Right, is there anything else? Maybe a Fibonacci extension. Let's see. Let's start this retracement from here, 6th of March down to the 11th. Let's use the extension levels 127 and 161. Probably not. Okay, nothing really useful here, so that's fine. Let's not force a Fibonacci level into our analysis. Should there not be anything of importance? All right, anything coming in? Just want to make sure. Nope. All right. Okay. If not, then let me check. All right. Okay. So these are the key support and resistance levels for WTI oil for the 4-hour time frame. All right. So before we wrap up today's session, let's see what can we do. Let's take a look at the US 500. Right. Let's look at it on once again on the monthly time frame first. Right. So you can see price has made this all-time high for the S&P 500 here. So the US 500 is the instrument that tracks the S&P 500 futures. So we can see price has made the all-time high at 5,189.10. Right, this month, it easily broke above the previous all-time high at 4,791. Right, you can see how strong this move has been since November. Right, we've had almost 5 months of strong consecutive gains for the S&P 500. So there's also a case for, we can also see a pretty decent ascending trend line here on the monthly time frame. And then the first major support was likely to be at this swing high that occurred in December 2021. This is likely to be the first major support for uh, the US 500, right? And okay, like I said, with price trading close to all-time highs, how could we find another suitable resistance area? Well, one way is we can use a Fibonacci retracement. We can start this retracement from here, 3rd of Jan, down to this low on the 3rd of October. We can use the extension levels at 127 and 161%. So in this case, we can see where these two levels lies quite clearly, right? First resistance aligns very well with the 127%. Let me just adjust the labeling, the color of the labeling, so it's a bit more clearer. Right. So then first resistance aligns, the all-time high aligns very well with the 127% extension. And where we can probably identify the next resistance level would be at the 161% extension here. So that's at 5,639. We can also use a Fibonacci projection. So this projection is going to start from here, 3rd of October, going up to this high here on the 3rd of July, and ending with the low here on the 2nd of October. So we can see the 100% Fibonacci projection aligns very well with the extension at 127%, giving us a Fibonacci confluence. So we shall only keep the 100% projection level. Right, okay. So is there anything else? There's also another projection level that I can use. Okay, this other projection level is going to start from here. First point here, 2nd March 2020, going up to 3rd Jan 2022 and ending here on 3rd of October 2022. Let's pull up all the fibs. Right, we can also see 61, 78 aligned very well. And if you go a little bit higher, you can also see the 100% as well. So let's just keep all of them on just for reference to see potentially where the next resistance levels could lie. Right, okay, so take note, these are the significant levels for the US 500 on the monthly time frame. Let's see if I can just fine tune the analysis. Let's go on over to the daily time frame, and then we'll look at the 4-hour time frame and see if we can fine tune any of these levels here. Okay, first resistance quite clear, the all-time high. In terms of support, maybe that's a pretty, I think first support is fine, right? First support is also pretty clear. Just adjust the level a little bit. Right, so you can see a very strong pullback support level here at 4,806, and where I can probably see an intermediate support level maybe around here. There's a pretty decent intermediate support level around here. Maybe there's a Fibonacci retracement that we could use. Let's start it from here, 27 October, going up to the high here, 8th of March. Do we have anything? No, not really. We already have the 23.6%, which is another overlap here, pretty another decent overlap level here. But apart from that, we don't really have anything else. So let's just keep 23%. Right, okay, so on the daily time frame for the US 500, there could be a potential support level here at 5,050, right? This is a pretty decent overlap level here. And the next overlap level comes in at 4,929, which is a level that aligns well with the 23.6% Fibonacci retracement. However, the major support for US 500 is this pullback level here at 4,806. All right, okay, so we've come towards the end of today's live analysis session. Yeah, I hope this has been a great webinar for you guys today. Do take note, we've got a very heavy calendar this week, right? We've got 5 central banks making their monetary policy, releasing their monetary policy statements, as well as conducting their press conferences this week. Starting off with Bank of Japan tomorrow, 19th of March. Although the time is has not been fixed, but typically it should be around 3 to 4 a.m. GMT time. Then we've got the RBA at 3:30 a.m., followed by the press conference at 4:30 a.m. Then on Wednesday, of course, we've got the highly anticipated FOMC meeting at 6 p.m. The statement is going to be released at 6 p.m. GMT time, followed by Chairman Jerome Powell's press conference at 6:30 p.m. Right, this is definitely going to be a very volatile period for currency markets as well as for commodities such as gold prices as well. And finally, we wrap up with the Swiss National Bank on Thursday, 21st of March, 8:30 a.m. They dropped their monetary policy statement, followed by the press conference at 9 a.m. And then we have the Bank of England releasing their statement at 12 p.m. GMT time. Bank of England does not have any press conference schedule on that day, not that I see of. So yes, it's just a monetary policy statement. Plus, we've got a bunch of other economic data points that are going to be released as well this week. So take note, it's a very heavy calendar lined up, and it's definitely going to be a very market moving trading experience. So expect high trading volatility, high trading activity for this week for across all the major currency pairs, even the crosses, right? The yen crosses, especially for tomorrow, and of course for gold prices as well. All right, thanks everyone for tuning in into today's live analysis session. Do keep an eye out for all upcoming webinars by IC Markets for this week, and I look forward to catching you at the next webinar. All right, take care and have a great trading week.